Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8566 mark, and here on TradingView the market is down by 1.99%. And in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliot wave structures, the Fibonacci's, the areas of support and resistances, and also draw out any key chart patterns that you have information on this chart. And I'll kickstart the video by giving a brief of what has been happening on this chart. Polygon Matic from the all-time high has been seeing lower prices in this massive ABC corrective movement, which has now taken us back to around the $0.32 mark, and having done so, I believe it has done the minimum that we expected that ABC corrective movement to do, and very soon we are going to see a very nice bounce to the upper side, obeying this Elliot wave structure, having our wave 5 taking us to an all-time high in the next bull movement. And before we get to an all-time high, we first need to see that first wave to the upper side, and I believe that is what is playing out here on the Polygon Matic chart. And if I jump to the 4-hour chart for further analysis, here on the 4-hour chart you can see I have this Elliot wave structure in yellow, which is a fractal wave within that first wave to the upper side, and I believe we are in the formation of a fifth wave to the upper side, which will be completing that higher Elliot wave count 1 to the upper side. And if I get a little bit into the details of the formation of this Elliot wave structure so that it can give us the key scenarios that we expect to play out, after making our low down there, we saw a very nice bounce to the upper side, making our high for that first wave, then saw a very nice retracement to the lower side in the formation of a wave 2. After making the low for that second wave, we saw a very nice bounce to the upper side in the formation of a wave 3, making our high at around the $1.06 mark. And after making that high, we saw a very nice retracement over here in the formation of a fourth wave, and because our wave 4 is a retracement of the third wave, we can use the Fibonacci's, connecting them from the low of this wave 3 down here to the high of that wave 3, and that gives me a minimum target area to the lower side in the formation of a fourth wave between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the charts like that. And that target area lies between the $0.81 mark and the $0.66 mark, and you can see we retraced into that target area, making our low at around the $0.69 mark in the formation of that fourth wave. And because our wave 4 is a corrective wave, I also expected to see an ABC corrective movement play out over here, and I believe we are seeing such a structure, having this as the wave A, then a wave B making our peak at around the $0.94 mark, then continued pushing low in the formation of our wave C, making our low at around the $0.69 mark. And having seen that movement to the lower side in the formation of that ABC corrective movement, whatever I expect next on this other side is the formation of our wave 5 to the upper side. And because our wave 5 is an impulsive wave, I also expect to see fractal waves in formation within that 5-wave structure to the upper side, and I believe we are seeing such a structure right here. And before I get to that key movement to the upper side in that Elliot wave structure, it's good that I show you the key chart patterns that we have information right here. You can see I had this channel that we had been trading within in the formation of this fourth wave, and we managed to break out of the channel to the upper side after finding support at around the $0.78 mark. And after managing to break out of the channel to the upper side, we even saw a successful retest of that key area, that is the upper side of the channel. And after the retest was in, we continued pushing higher, making our high at around the $0.96 mark. After making that high, we saw a bit of a pullback to the lower side in this movement right here, and in these movements right here we are seeing another chart pattern that is in formation. And if I draw it out, that chart pattern is a double top. We can have that as the first top right there, then so a bit of a pullback, seeing the formation of the neckline, then we continued pushing higher in the formation of the second top, and right now we are seeing a breakout out of this chart pattern. We are seeing a breakout out of this this double top, and this is a chart pattern that normally breaks to the lower side, having the target area of that breakout as the height between the tops and the neckline. So using a trend line, we can get that height and then place it down here to give us a minimum target area to the lower side, back to around the $0.083 mark. So that is the minimum that I'm expecting that movement to the lower side to give us to break to. And over here you can see here on the 4-hour chart we have a very impulsive candlestick that is in formation, and this is an engulfing candlestick, and that means lower prices are coming our way. So over here I'm expecting very soon we are making the low for that fourth wave over here. And if I draw that Elliot wave structure that I'm referring into, after making our low down there in the formation of a fourth wave, this movement to the upper side, I've been terming it as an Elliot wave structure, having that as the first wave to the upper side, then a wave 2, then this impulsive movement to the upper side as a wave 3, making our peak at around the $0.96 mark. Then whatever we are seeing over here is the formation of a wave 4, and then I'm expecting a very nice movement to the upper side in a wave 5 to complete that higher Elliot wave count 1 to the upper side. And because a wave 4 over here is a retracement of the third wave, we can use the Fibonacci's, connecting them from the low of that second wave down there to the high of that wave 3 to give us a minimum target area to the lower side in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5. And within that target area, we also have our invalidation point here on this chart, and that can only happen in case this fourth wave retraces into the high of that first wave, and that is by retracing back to around the $0.85 mark, and we are so close to that invalidation point. So let's continue watching that key area that I've drawn out here at around the $0.85 mark. In case we continue pushing lower in the formation of that fourth wave, then I'll have to restructure my Elliot wave count over here and view it as something else. So let's be patient and see how that plays out, and I'll keep you updated on that. Also sketching out a minimum target area to the upper side in the formation of that first wave to the upper side using a trend based Fibonacci. I just need to connect the trend based Fibonacci from the low of that wave 1 to the high of that wave 1, then dragging the fibs to the high of that wave 3, and that gives me a minimum target area to the upper side at around the 0.618, and that is at around the $1.24 mark. So let's be patient and see how that plays out. And over here you can see that the breakout is in out of these double top that I have drawn out over here, and my minimum target area is back to around the $0.83 mark. So let's continue watching that chart pattern and also the key areas of support and resistances in here, and taking a look at the indicators to see what movements will be supported here on the 4-hour RSI. On the 4-hour RSI, we are trading at around the 25 mark, meaning we are in the oversold region, and I'm expecting a bit of a recovery here on the RSI because we have massive room for us to support any movements to the upper side, and that means the breakout over here could be in, and we are close to the target areas, and that means very soon we are going to see that reversal to the upper side in the formation of our wave 5. Also taking a look at the MACD, here on the MACD we had printed a bearish cross, and that means lower prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.